Let's get to the markets this morning. It's going to be a busy one, a busy trading day ahead. Bob Iaccino of LotusBrokerage.com is at the CME this morning. Bob, good to see you as always.
Good morning.
We're going to work our way through a couple rate decisions over in Europe, right? We're going to get jobless claims and productivity. Is it going to be as crazy as yesterday was with all the cross currents we got?
I don't think so. I think the central bank decisions are pretty much set in stone in terms of what they're going to do with the rates. And obviously, we're looking at the comments. But it's very hard to react to comments like that when you've got U.S. non-farm payrolls coming out at the end of the week. I mean, it tends to dominate every month, and the market tends to take its direction from that.
So
I did want to ask you something about the Yankee correlation to the equity market.
Yeah.
We call that data fitting, right? They've had 27 World Series, but they're not in it every year. So I think we should look at what happens to the market when the Cubs don't make it to the World Series. So it's more consistent on the data.
Yeah, it'd be a larger sample, that's for sure.
It'd be a larger sample set, right.
What are you looking for in jobs tomorrow?
Well, you know what? I woke up optimistic this morning, Carl, and I'm not sure why. I'm really not sure why. Everybody keeps looking at the thing that keeps slowing down the equity market move, right, is the end of everybody's statement, but we still don't have job growth. So we're looking for a bit of a surprise number in one of these months, right? Everybody expects a negative number. Everybody expects an unemployment rate to hit 10%. Now, when it does, there could be a little bit of a sigh of relief there. There could be a little bit of a rally once we hit 10%. It'll happen in the second half of the day if it happens. It won't happen right off the bat. But it's one of those things where it's like, you know, the pain is not necessarily as bad as the expectation of the pain, like getting a shot at the doctor. But I am looking for one of these jobs numbers to surprise. You saw a little bit of positive data out of the ADP, slightly. You know, the service sector grew, and we saw the contraction of jobs slow. We saw a little bit of a positive view out of the Challenger Grain Christmas, where companies expect to lay off at a less quick pace, if that makes sense.
Yep.
So I'm looking for one of these jobs numbers to surprise, and I hate to say it, but it might be Friday.
Yeah, but even so, you think a 10% number is sort of like ripping the Band-Aid off. And then in that, there might be some relief rally.
I mean, we don't want to see 9.9 jump to 10.3 or 10.4. That would be brutal.
Right.
But if we see 10, you know, and you could see a little bit of a relief, like, okay, we got it. We got our 10%. Now we can move up. It's the last thing that seems to be holding the equity markets from a short-term pop. Now, I'm personally not that optimistic about third and fourth quarter of 2010, but we're talking about today. We're talking about tomorrow. So I think we could have a surprise out of the jobs number in terms of, I'm looking for that 2 to 3 to 3.5% up day in the Dow to happen. It's got to happen soon, and when that happens, I think we reassess, but I think it's coming.
Yeah. Looking at it from a calendar standpoint, Bob, are managers going to try to chase return going into the year end, or are they really going to try